this all the time. Over and over, plans that build up these accounts, these forfeiture accounts, like they're saving for a vacation. This is a tax-deferred vehicle, folks. We can't park the money in there and benefit from it as employers. We had a plan recently where participants had already left for 10 years, and their unvested accounts, which are still basically in the participant's name. But those monies should have been forfeited long ago because those participants are never coming back. So forfeitures don't just come out of the distribution process either, folks. So, Mr. Fix-It, what do we do here with forfeitures?
Well, forfeitures, first let's talk about the IRS view of defined contribution plans and the accounting for them. With limited exceptions, the IRS regulations and rulings require that the money in a defined contribution plan, at year end at least, be allocated to participant accounts and not held in suspense. There are some exceptions for suspense accounts, but they are limited. And they have raised this issue a lot. They've publicized their concern over it because, like you, Eric, the IRS is finding that that plans may have hundreds of thousands of dollars in unallocated forfeitures that have rolled over from year to year to year. So, the general rule on forfeitures is that you use them to pay expenses or to reduce employer contributions or add to employer contributions, either way, in the year in which the forfeiture occurs. Now, that's a little impractical with a daily valued plan, and so the IRS definitely says that a plan document can say that you use the forfeitures in the year following, once you know what the forfeitures for the prior year were. But then the expectation would be then, for example, that the 2016 forfeitures would be used up by the end of 2017 and not rolling forward to 18, 19, and 20 like many plans have been doing. If you get yourself into this situation, the correction is fairly difficult in that you need to go back and reallocate money to people who should have received it in prior years. So it certainly is behooves you to get this done and get this done in a timely fashion, as opposed to letting this money build up. Because if the IRS comes in on examination, they will make you go back a few years and spend the time and money to figure out how to, who should have gotten what in, for example, 2014, 15. And get it cleaned up. So it's best to clean it up now before the IRS comes knocking on your door.